Good afternoon, everybody, or good morning, depending on where you're joining us from today. I'm Eric Lenask. I'm with TMC, and it's my pleasure to kick off today's live webinar. Hopefully, you can all see on your screens in front of you. Today's session is called Transforming Omni-channel Banking, Digitization to Personalization. You know, these aren't new terms. I mean, across various industries, customers have been become increasingly comfortable with and dependent on different digital technologies and different channels, and they're leveraging so many different tools to interact with all sorts of different brands. They also understand the digital tools that they're using are providing incredible amounts of data to different vendors, and they expect brands to use that information to provide more customized, more personalized information and experience. They're not looking for cookie cutter information and brand interactions designed for mass audiences. And that's something that different brands have had to deal with and adjust to. It's a trend that's been growing across all industries, and really customers are expecting the same kinds of experiences and interactions in their banking relationships as they've come to enjoy in other industries. We already expect our hotels and our airlines to know and understand our room and seat preferences and sort of put those in for us when we interact. We expect different retailers to know our past purchases and shipping preferences, and even make recommendations and remind us when we may be running out of certain things. We really expect any information that we get from the brands that we work with to be relevant. We really want all of our interactions just to be a little more simple. And last, but certainly not least, we expect these interactions and that information to be consistent and contextual across all the different channels that we're using. We want to be able to engage with brands at any time, anywhere, using any device or communications channel that we want, whatever's most convenient for us, not for them, but for us at the time, without having any impact on the service that we get. These trends are becoming increasingly critical in banking too, and banking institutions just have to meet customers in the digital world in which they live. From mobile banking and internet banking to in-person interactions, from messaging apps to voice calls, whatever those interactions may entail, customers want the same experiences across all the different channels with their banks. They want a true omni-channel experience that allows them to move between different channels and use whichever they prefer, and they want consistency regardless of what they choose to use. So how do you get there, and why do you need to get there? Well, that's exactly what our two speakers today are here to explain. Joining me for about the next hour or so are Manoj Jain, who is the Chief Marketing Officer at Panamax, and with him is Jay Jayasima, who is the Chief Technology Officer at Panamax. Welcome, gentlemen. Thanks for joining me today.
Thank you, Eric.
Thank you, Eric.
So for, like I said, for about the next 45 minutes or so, Manoj and Jay are going to show you why and how to provide a seamless, consistent, and secure, more importantly, omni-channel banking experience, and really meet your customers on their terms, and in turn increasing satisfaction and loyalty. Before I hand today's session over to Manoj, just a couple of quick notes though. We do have 2 poll questions built into today's session, and I do thank you in advance for taking just a couple of moments to share your thoughts with us and to help Manoj and Jay add a little bit more context to their commentary today. And we also have a Q&A session at the end of today's event. I encourage you to submit any questions you have using the interface on your screens, and feel free to do that at any time throughout today's presentation. And finally, if you're interested in today's presentation deck, contact information for Panamax will be available on the last slide today, so you can reach out for that. So with that, it's my pleasure to welcome Manoj Jain from Panamax.
Thank you, Eric. So, hello everyone. I hope you all are healthy. The world is going through unexpected circumstances with COVID-19, changing the strategy for almost every industry. Banking industry was already going through resurgence with cashless transactions as well as digital banking coming into prominence. But today, with more and more contact restrictions coming into picture, it has become a necessity rather than a nice to have functionality. Several banks were already researching and even working on a strong omni-channel paradigm even before the pandemic hit. Today, we will discuss what exactly an omni-channel strategy should be, what all should it include, and how banks and financial institutions can derive maximum advantage of the phenomena. The questions that we intend to answer with this webinar are: where did it all start? How has the banking industry been evolving for the past few decades? And accepting omni-channel as a prominent customer engagement strategy. What are the current trends in the banking industry? Is a digital-only strategy sufficient to drive the customer engagement? Creating a comprehensive digital banking platform that can be scaled to suit the customer's evolving requirement. And finally, how will omni-channel banking shape the future of the banking industry? Now, today, as we are talking about omni-channel banking, we must not overlook how we have reached here. What started as a single channel medium translated to an aggregation of multiple channels that remain connected, almost like an IoT of the banking system. The single channel banking evolved just one click touchpoint that connected customer to the bank, mostly the physical bank branch. The introduction and accessibility of different devices gave the way to the development of multi-channel experience that allowed the customers to interact with the bank through any of the devices individually. Further came the cross-channel experience that provided multiple touchpoints to engage with the customer individually. This mechanism still lacked the ability of the devices to interact with each other interchangeably. This shortcoming gave the way to the development of omni-channel ecosystem that integrated several touchpoints seamlessly, letting the customers to connect with their bank through a device of their own choice. People usually confuse between multi-channel and omni-channel platforms, although both of these are very, very different from each other. While multi-channel ecosystems allow customers to use different platforms to complete a banking transaction, it does not connect these devices to each other. Omni-channel ecosystem, on the other hand, connects these different devices, so the user has the capability to use them interchangeably. Omni-channel approach to the customer service is about providing integrated and the seamless customer experience throughout the channels. Let us first discuss what is omni-channel banking. We can define it as an approach that connects multiple access channels so that the customer can easily start a transaction from one channel and can finish it on a different channel. And I must add here, a study by Accenture in 2019 highlighted that about 50% of the users wanted to be able to switch between human and digital channels. That means that omni-channel is not restricted to digital mediums as popularized. It ranges from digital to personal interactions. An efficient omni-channel banking strategy also helps banks to collect relevant customer data and subsequently create personalized campaigns based on the device usage of that particular customer. You can see the picture here shows all the different kind of channels which are supported by a robust architecture based on the open APIs. The heart of the system still remains in the core banking system. All the channels are interfaces from where the services can be accessed by the customers. These interfaces interact with the CBS on an APIs, thus making it possible to expose, consume, and define new services. It also makes the financial institutions or third parties to consume these APIs. Now, as we see, the world is gradually moving towards an omni-channel approach that is not just making their banking experience seamless, but also helping banks to collect device customer data. We have had multiple studies that shows that despite the prevalence of digital channels, customers still prefer bank branch for certain type of services. The omni-channel approach is now at the core of the most bank strategies, as new customer behaviors are strongly influenced by innovation, ease, accessibility, and simplicity of usage. I want to mention the bank Chase here that has enabled customers to make ATM withdrawals without using a card. They simply use the bank's mobile application and tap the cardless symbol on the ATM with their smartphone. To withdraw the cash, they simply enter the bank card PIN to access the regular ATM menu. This is an example of an improved customer experience that makes it easier to access banking services. Now, according to a 2017 survey of banks in Europe, North America, and Asia Pacific, approximately 60% of active banking customers use digital channels, both online and mobile. While 80% of all customer touchpoints occur on digital, however, digital channels represent just 25% of the total sales, with 20% coming through online medium and 5% coming through mobile. This shows that while digital channels have transformed the banking sectors, there is still a major human interaction involved when it comes to converting it into the revenues. Now, as customers migrate to digital channels, banks are realizing cost savings by reducing their physical footprint. In Italy and Spain, the number of branches have fallen by more than 40% from its peak in the 2000s. They are also adopting branch formats to reflect the specifics of local micro markets and testing new low-cost distribution models like the non-proprietary retail networks. Branches are also being redesigned to focus on complex products with remote teams leveraging digital tools like video conferencing and screen sharing. Now, here is a peek at the trends in the omni-channel banking ecosystem. You will notice here that the slow progress the banks are making in this direction. Getting a wholesome omni-channel banking ecosystem is a complex task, and most banks and FIs are still not ready for it. Be it a small, mid-size, and major organization, most of these are still in the research phase, with small size organizations leading the brigade. However, a sizable number of the large organizations are already executing their own omni-channel strategy. Despite the lag in the actual implementation, data shows that omni-channel delivery is close to second to mobile channel development in what banks and credit unions say are their most important retail banking technology priorities. Yeah, Eric, uh, do you have a poll question here?
Absolutely. As Manoj mentioned, now we're up to our first poll question, and we'd love to hear from you based on some of Manoj's comments. Do you think omni-channel banking is changing the face of the global banking ecosystem? Very simply, yes or no, or you're not sure right now, or you need to learn more about it. Manoj, is it fair to say that that the banking industry has been a little bit behind some other industries in terms of embracing omni-channel, and why is that?
Yeah, because see, banks are traditionally very conventional players. Banks have been in existence for more than 150 years, but they are very, very reluctant to adopt the new technologies. The primary reason is being security. They are very, very conservative when the money matters are involved. And yes, they have to be. But in last 5 or 7 years, you must have seen the banks are now adopting a lot of technology. The only reason being they are facing a lot of heat from the telecom operators and the fintech providers, which are very, very fast and technology savvy companies. So of course, yes, banks have been slow, but now they are picking up the pace in the omni-channel direction. And soon in next few years, you will see that most of the banks will have a very robust omni-channel interaction architecture where customers can actually initiate a transaction on one channel and can actually finish it on the other. That will help us drive a seamless experience for the consumer across the board. And of course, then we can always say this, yes, banks will be changing their strategies and will be aligned to the consumer demands. as you can see the results on the quick poll.
And it's fair to say then that it looks like our audience agrees with what you just said, that that banking is changing, and that very soon customers will have those same kinds of experiences that they're enjoying across other industries.
Absolutely. Okay, now let's move to the next one about digitized omni-channel banking. Now here are a few services a bank can offer to its customer digitally. Now, simplified onboarding process where documents are digitally scanned and stored, thus providing hassle-free account opening. Anytime, anywhere banking where mobile, internet, or ATM interactions can help customers do their transaction at odd hours, and financial services are always available. Better savings products to give good returns to customers depending on the market scenarios and other factors. Robust reward programs like gamification, coupons to entice the customer to use more and more the banking applications. Convenience, where UX flows are tailored as per the needs of the customers, like frequently used services on the home screen and customizable widgets. Best-in-class security and fraud management systems to provide the peace of mind to the customers. And finally, scheduled and real-time payments can further enhance the digitalization of the services. Personalization. Now, consumers want to move fluidly from one channel to the next. What they really want to do is to start a transaction online, and if they choose, complete it in a branch. They might want to research something online and have a bank personnel explain more about it when they go into the branch. Yes, with the digital first approach today, a bank may choose to have fewer branches, but the branch personnel will now transform from transaction processors to financial service experts. They are the ones who will bring value to the customers by offering personal services in a whole new way. The data generated through digital mediums of operations have led banks and FIs to integrate their business intelligence systems and turn it into an actionable data. We very well know what all we can achieve with the right data set. Here are some of the services that can only be offered through personalized banking, like personal consultation, management of high-end services like wealth management and portfolio, convenient banking, where customers need any kind of directions of real-time assistance. Best of both worlds. Anything that you offer digitally can definitely be facilitated manually as well. That earns brownie points to the personalized banking. And finally, some other kind of offerings. So yes, now the stage has come where banks are going to move from digitalization to personalized tailored offering for their customers. Uh, banks must find the combination of digital and personal interactions that match the preferences of the local markets they serve. Most have made progress, ramping up investments and remote platforms to complement traditional channels. However, many have not yet made the leap from multiple channels to omni-channel. That is, making a movement between channels seamless and using digitalization to enable cross-channel sales and marketing. The result is that banks are missing an opportunity to improve the sales productivity. If a consumer has gotten part way through, say, a checking an account application, has a question and calls a bank or credit union's contact center, the agent should have the context for the call. They should be able to say, oh, I see you stopped at this point, what can I help you with? And if it's a relatively simple thing, the agent suitably equipped could say, I can finish this job for you in 30 seconds. So this is the kind of interaction that customers are now looking at. There are some capabilities bank will need to develop if they wish to go for true omni-channel distribution. Advanced analytics applied to the data generated by the customer transactions and digital banking. It can be used to increase the effectiveness of omni-channel sales. Analytics allow banks to develop insights on customer segments and behaviors and to be more precisely targeted and tailor the products with right value propositions. Digital marketing is giving significant boost to every industry, and banks can too take advantage of this phenomena. Tracking customer clicks across web pages, measuring time spent on particular subjects, and connecting this data to the analytics engine can give some great insights into the consumer behavior. Just like the right digital prowess can win over the customers, a customer call at the right time can address the customer needs. Branch staff are often required to intervene in a customer journey that was initiated or will end in a different channel. Providing the right sales network capabilities can help them make these interventions successful. Lastly, any digital touchpoint should be personalized. Any analytical data and personalized insight passed on to the relationship manager, enabling them to use the information for better customer servicing. Now, customers obviously is the crux of a successful omni-channel ecosystem. Gradually, evolving customer demands prompt shift in banking priorities. Digital innovation is a basic expectation for customers today. The key for banks is to go beyond that. Now we need to understand what makes for a seamless transaction for them. Engagement. A true omni-channel experience unifies both inbound and outbound communication to deliver proactive and effortless transition between access channels. A wholesome omni-channel platform can allow the banks to create seamless, personalized engagements across all channels throughout the entire customer journey. As both the customers and agents can shift between channels without losing context, a single scalable and integrated platform enhances user convenience, who thereby convert into customers, generating profit opportunities for the banks. Interoperability. It is an important criteria of a seamless banking ecosystem. There are three ways this can be achieved. Scheme interoperability, where two or more FIs agree to work on the same open loop payments system along across bank payments. The network interoperability, in which one payment scheme negotiates exchange agreements with another. This type of interoperability is almost exclusively used for cross-border payments. And lastly, parallel system interoperability, wherein service providers acts as intermediaries between merchants and card networks. Now, banks can implement these three kind of interoperability. Of course, multilateral agreements among three or more providers, bilateral agreements negotiated between two providers, and third-party solutions that connect these providers. So ultimately, every entity has to get connected with other entity so that each one of can make profits and revenues. Now, flexibility, which is another and most important factor that interconnects different access channels and allows the customers to use any of them interchangeably. This facilitates anytime banking irrespective of the out of operation hours or even offline channels. Customer can choose the type of channel as per their need and convenience. The important aspect is the availability of the same information across these channels as seamless transition from one channel to another channel. So you can see on your screen the various channels which are in use today by the customers, including web, Android, iOS, POS, the newer ones like NFCs and QR codes, the old conventional like USSD and IVR, SMS, and the new ones which are coming in picture are virtual teller machines, and of course, the oldest and conventional one is the banking branch. Now, here is the most important aspect: what to focus on the banking segment from the omni-channel banking perspective. Now, a wholesome omni-channel banking approach encompasses all these stages of a transaction, right from the customer onboarding to an account closure. Let us look at what to focus during the journey of a customer life cycle. Now, customer onboarding, it has to be automated and should be easy and convenient for the customer. If there are entry barriers in the onboarding process, the acquisition gets tough and the cost of acquisitions are high. OCR, electronic KYC can certainly help in achieving that. The next one is content and functionalities. Service providers must provide the basic content needed to run and execute the various services. But to be ahead of the competition, additional value-added services are needed. For example, today, WhatsApp banking is getting a lot of traction. So with the other channels of interaction, WhatsApp banking can certainly become a differentiator. The next one is design and ergonomics. UX first approach, wherein users should be comfortable with the use of interface, and also it should be compatible with wide variety of available devices in the markets. And of course, navigation. Information needed by the consumer should be easy to find. Then only it will be widely accepted and will be used by customers. The next very important one is cyber security. Security is always paramount when it comes to money matters. So the platform providers need to ensure that the best-in-class security features and protocols are used to safeguard the customer's money, including the in-transit transactions, storing of data on devices, and so on. Advise. The next generation of artificial intelligence and machine learning tools are needed to guide the customers towards the right kind of financial strategies. It can be like personalized financial management tools, which shows the usage patterns and advises the customers on the next steps, like how to make more profitable investments or change the current expenditures patterns and so on. Credit on demand. It is very, very important for customers since they do trust on the financial institutions with which they are interacting on daily basis. Systems should be in place to analyze the customer's spending and earning patterns using AI/ML so that pre-approved loans with a predefined interest rates can be given as and when needed by the customers. Even for the outstanding loans, there should be foolproof automated mechanism to recover the same. And finally, account closure. Predictive analytics should be used to get the early signs of customer dissatisfactions and the propensity of a customer to get churned out of the system. This way, more customers can be retained before they leave the service providers. And we all know that the cost of acquisition of a customer is always greater than the cost of retention of a customer. Now, finally, how can banks rise up to the challenge? Now, banking industry for long has had a reputation of a traditional industry which has stuck due to the security concerns we have dealt with for a long time. However, we must realize that the times are changing. Today, we have several fraud-resistant solutions that have changed the course of how banks operate, with the customers changing their position and opting for a more inclusive retail-like banking. I believe banks should follow the footsteps of other innovative consumer-focused industries. The focus should be on delivering an omni-channel banking experience that is relationship-focused, interactive, relevant, and personal. Banking customers are no different when it comes to managing their money. They expect to access their information and perform an ever expanding list of banking actions anywhere, anytime, and any device. They expect their bank to meet their individual needs and preferences in the same way that their media streaming services or favorite big technology company does. With these expectations, they are challenging what banks do, why they do it, and how it is done. Now, meeting customer expectations no longer hinges on a multi-channel strategy per se. Although multi-channel banking has been around for years, it is no longer groundbreaking and certainly does not provide a competitive advantage. Now, what can give banks the edge? Taking stock of their various channels and strategically considering how their customers use them, what this reveals about their preferences. Today's mobile-first society enables personalization on a scale never seen before, which has transformed the consumer habits from how they spend their free time to how they plan their vacations, where, when they shop, and even how they manage their homes. There are valuable lessons to be learned from industries like retail that places a very strong emphasis on customer experience. Some of the world's top-rated banks understood this years back. They succeeded in turning customer experience into a competitive advantage that resulted in increased market share and remarkable customer satisfaction rates. For the retailers known for their customer first perspective, it's their store of data that gives them the edge against their competitors. Now here, I hand over the presentation to my colleague Jay,
Mhm.
uh, who will further focus on Mobifin Elite. That is an ideal omni-channel platform generating maximum customer engagement for banks and financial institutions. Over to you, Jay, now.
Right. Thanks, Manoj. And that was a very good kind of presentation on the various business aspects, on the tracing the evolution of the omni-channel banking, from where it started to where we arrived. Um, I would like to kind of take some of these points from what you have talked about and uh, tie them together into how we built the Mobifin Elite platform in order to kind of take into account all of these requirements. Okay, and well, some of the, just to sum up what you mentioned, omni-channel banking is about making the same set of services, right? In this case, banking services available to customers across all the channels, right? Both digital and offline. Now, clients can carry out the same banking operations, like whether it's a website, mobile app, call center, or just directly walk into a bank. True omni-channel operations, right? They call for real-time synchronization of this data across all the channels. Like for example, I walk into or I go to a website of a bank and initiate the opening of a current account. Like you mentioned, right? I should be able to kind of put in my application there, and probably there's a long, there's a workflow that I need to go through. Like maybe I need to do my KYC process, my onboarding process, etc. But I should be able to kind of finish my application part there, and then resume at another point of time, go to my mobile app, and then start looking at okay, let me start my KYC process. Right? I may have done partial KYC process, then I should be able to kind of call into a call center to resume my KYC process or my onboarding process, etc. Now, the previously entered data into various channels here should be available, to the subsequent channels. And that's where, you get this true experience of, this comprehensive omni-channel, experience. And now this has some very serious implications in how the core platform is built to enable this type of data transparency across the various channels. Right? Just to kind of give you a sense of the complexity of the platform, let's say that you have about 1,000 services that you're offering to a bank or to a financial service provider, and let's assume that there are 20 access channels out there. So in essence, what I'm saying is I need to have 20 times 1,000, which is 20,000 distinct customized execution or service flows through my platform to enable this type of data transparency and continuity and a seamless experience across these multiple channels. So this gives a sense of the complexity of the platform that needs to be built in order to provide the seamless experience. Now, legacy architectures will find this a very big problem in order to provide this level of the flexibility. And this is where these new architectures with microservices based architectures, etc., they kind of play a big role in enabling this type of omni-channel experience. And sure enough, Mobifin Elite, in the next 2 or 3 slides, I'll be showing exactly what we have done in order to kind of enable this true omni-channel experience, be it for the banks or be it for the service provider, financial service providers or others, right? And in the case of digital banking, right, we are seeing here a number of services like bill payments, merchant payments, e-top-ups, etc. Then there are a lot of the inquiry type of services. Then there could be e-commerce type of services. Then there are other requests like checkbook requests, statement requests, etc. Now, and there are all these access channels. Like now we have shown about 10 access channels, and obviously there could be more access channels coming in. Like for example, like we are seeing like Facebook, WhatsApp, maybe even Alexa could be an access channel in order for me to start certain processes or kind of like do some of my banking services. So I should not kind of like limit my architecture, my core platform into architect myself into a corner, right? Like so, the architecture has to be very flexible so that anytime any new services are implemented, these will be available across all the access channels, and or any new access channels are enabled, these set of services which are existing will be made available to these access channels in a seamless manner. So let's kind of look into what type of an architecture would we need in order to kind of facilitate this type of flexibility. So Eric, like if you want to go through the second stop poll questions.
Absolutely, Jay. Thank you. We'd love to hear from you now. What do you think is the most prominent digital banking requirement for customers? Security, seamless traversal, or accessibility? And Jay, why we let our audience let us know what they think. I'm not even sure how I'd answer this. To me, I kind of need all three of them.
Absolutely, yeah. I mean, these three are very important. And if you look at like, there are a lot of this interviews that we did towards our potential customers and existing customers as to what they see as the fundamental requirements. And I'll be also capturing, what our findings have been, in the subsequent slides. But yeah, definitely these three are very, very important. Like, everything is customer centric, right? Like the banks or other financial service providers are kind of like making everything like so that the customer is at the center of everything, and the customer needs are kind of satisfied. So this would mean not only in terms of an experience of the customers, but also like obviously the security part of it. Like unless the security is provided in a very comprehensive manner, banks will not be able to open up their services to customers across certain omni-channels or across certain channels in order to give this omni-channel experience. And yeah, I mean, I totally agree with you. Like, but it'll be interesting to see what the perspective of our viewers are in this matter.
Well, since you mentioned that, why don't we take a look? And I guess honestly, I'm not surprised to see overwhelmingly security
Mhm.
is the top choice. Even though it kind of it's a must-have today. Um,
Right.
I think that people are, especially when it comes to their finances, are very, very aware of the need to have excellent security in place.
Absolutely, I completely agree with this. Because like it's also interesting to see the accessibility part is given as zero, which means like very important thing, right? Like we have taken accessibility for granted. I mean, today people are online all the time. Like there's no life without being online. So that is something taken for granted. And from there onwards, I can see that like the seamless traversal part is important. And security is the most important part that can entail this whole omni-channel experience moving forward. This is great. Yeah, there's a very, very good poll there. All right. Yeah. And so, some of the key features before I get into the platform specifics of like what you need in a platform are is availability of this various types of banking services across the different channels, which is again the core theme of our presentation today. Biometric verifications, these are some of the very important parts. Like as a technology provider, can you provide like the various types of biometry, whether it is like fingerprint, retinal scans, voice signatures, etc. So because like these kind of enable more interesting and more seamless type of services to the customer. Data management capabilities, account opening, like various types of actually like the pretty much the entire set of the banking services which you can which you have access to when you walk into a branch, right? This entire set of services must be available across all the other channels. And of course, like tying them all together is the integrated multi-channel user journey. So let's look at take a closer look at the MobiFin Elite platform. Right, there are four pillars. Number one, it is a very comprehensive wallet platform. So there are all kinds of bells and whistles of a typical wallet platform that goes with it. Different types of wallets, pockets, like different types of relationship between the wallets, different types of linkages from the wallet to certain accounts. So the second is it's a very comprehensive payment platform. So there are different types of payment platform: merchant payments, peer-to-peer payments, bill payments, etc. And all of these need to be enabled via this platform. And this is one of the core pillars of the MobiFin Elite platform, that we enable these types of payment services. And ACH is one of the newer form of payment that is kind of taking this industry by storm. A the extension of the architecture of the platform, has provided the ability to kind of offer this type of ACH type of services to our customers. Then the third is the banking API platform, and this kind of ties in core with what we are speaking today, about how do you integrate this open banking API, core banking interfaces, agency banking interfaces, etc., into offering this omni-channel experience to our customers. Right? And the last one is the value-added services that our platform can provide. With it, there are a lot of interesting, flexible commissioning in order to enable certain businesses to come in to this financial sector. Loyalty and rewards, campaign management. Manoj should talk about how this omni-channel digital experience of the customer enables this kind of very interesting campaigns and loyalties and rewards that can be enabled. And we as a platform, we ensure that these types of services are available to our customers, and we provide those. So what matters most to the customers? This ties into the poll questions. When we talked to our existing set and prospective set of customers, so the first very important thing, which seems undeniable across our conversations that we had with the industry: security and fraud. These are the most important things. And this is kind of literally it's very intuitive and a no-brainer, I would say, in a way, where financial matters are involved. Right? And the second important thing was control the costs, the capex and opex, and the capacity and scale, because they're seeing they're seeing the convenience of this digital media, and convenience of providing the customers this ability to do services from the comfort of their homes, or without going to a bank branch, etc. And all they're seeing is when these types of services are enabled, they are seeing a pickup of the digital sales. Right, the volume of business is going up because of the convenience factor that we are providing. And then so this means that the platform should be able to handle a huge capacity and scale. Now, with the legacy architectures, this huge capacity and scale handling would come at a very significant cost, right? And so in order to kind of be able to scale these platforms to a high transactions per second, we need to look at some of the latest and greatest software architectures in order to reduce the footprint of the platform while offering enhanced capacity and scale. So this cost is one of the sensitivities that they've demonstrated to us. And of course, the third part is the flexibility to deploy services, new services. And I mentioned to you about this 20,000 odd execution flows, right? And this is just a number I picked up out of the thin air. But there could be as many, if there are N services and M access channels, they need to be N by M execution flows that would be seamlessly enabled by the platform. So you can clearly see that any legacy architectures that are hard-coded architectures they'll find it impossible to provide this level of flexibility. And our platform has this, which in the next slide I'll talk about, what kind of flexibility that we are offering as part of ours. So security was the number one factor. And just to quickly run through, what are we offering as part of security? We are one of the very unique platforms, the MobiFin Elite, platforms in the industry that offers a full-fledged security mechanism via the elliptic curve cryptography. So ECC provides a very strong cryptographic strength when compared to the traditional RSA and AES mechanisms. And not only it provides a very high cryptographic strength, but this strength also comes, at a very, very small footprint in terms of like the compute power needed to provide this. So it's kind of it's built into the nature of the ECC algorithms that we can provide this, almost to the scale of 10,000 times more strength than the RSA and AES, while your compute strengths needed to execute this are infinitesimally small compared to the RSA and AES. I mean, we have done for example, we have taken a payload size of a certain size, and when we go through on a Android or iOS device, when we go through the encryption using the RSA and AES mechanisms, we see, just to give certain numbers here to provide you a context of what we are seeing, around 900 to 900 milliseconds to 1.1 to 1.2 seconds in order to do a pretty big sized encryption. And with the ECC on the same device, on the same platforms, we are able to see anywhere from 20 to 50 milliseconds. So this is like a significant amount of compute power that we are saving while providing a very high cryptographic strength. And with this, we are very convinced that the banks will see this, as a positive in terms of opening up new services, because traditionally, with RSA and AES running on the mobile devices, they were a big drain on the battery power of the mobile devices. So there were always a hesitation to provide very security sensitive services over this phone. But now we are seeing that with ECC, we are opening up the banks and telling them you don't have to worry about the security part, in terms of the customers accessing your branches from remotely or the mobile. So and so this, I think, will play a very significant role as we move forward in enabling the banks to open up new services and for us to enable omni-channel services. The second is the authentication part. Obviously we have to have an extreme authentication so that when I am accessing my bank, the bank exactly knows who I am. So we use device authentications, we use user authentications, API authentications, time set tokens or authorizations, reauthorizations, etc., combining biometry, different types of biometry into this. So enabling this type of multiple levels of authentication and authorizations will provide the security that is needed so that the bank knows that the people who have access to the bank are the valid account holders and not perpetrators of fraud that are coming into the platform. So then there are obviously all these channels, right? Whether it is a web or mobile apps, etc. These access channels, they're all browser based, whether it's on a web or mobile site. And there are bodies there like the OWASP, which is the Open Web Application Security protocols. And there are these standard organizations that are actually looking into how can we provide certain best practices that you can follow in order to cut down a lot of the security holes that can be taken into advantage by the perpetrators of the fraud. And so safeguarding from different types of injection issues, broken authentication, sensitive data exposures, cross-site scripting, etc. Like a lot of these, if you follow these best practices of the OWASP, and they have come out with a recommendation of 2.0, a couple of years ago, this enables these apps to be pretty secure. And of course, this is one of the key things that the bank needs to know, that they are able to kind of offer services to the customers, and that the technology vendor that's working with them is able to provide end-to-end security for them. Right, then there are different types of velocity checks. Right, the velocity checks you monitor for fraud, or you can monitor for capacity usage. So you're looking at a particular data item, it could be a credit card number, for example. How many times is that used per unit time? Right, and and then we keep track. We set some baselines. Okay, this particular credit card, typical usage is 2 times or 5 times a week. And if you suddenly see a jump in these numbers, right, and then we can kind of provide some alarms, and then we can push some information out to the banks or to the financial service providers to start the investigation into what's going on here. And these can be different types of data items. It could be the user, the device, the IP address, like email IDs, phone numbers, credit card numbers. Any of these factors can be taken into account, for this velocity checks. And then finally, the fraud and the AML. Um, so there are several bodies, like the US, we have the Office of Foreign Assets Control, which is the OFAC. They come up with different types of lists, such as a blocked person list, then the sanctioned entity list, or you have this AML guidelines, which are provided by the Bank Secrecy Act. And so a lot of these lists are out there that we can take into account through our platform, and then we can offer, as part of our onboarding process, we can do some preliminary checks on the validity of the customers or the entities using the platform. Right. And a quick thing on the end-to-end flexibility and the architectures, how we are enabling this type of N by M execution flows into our platform. Like typically any service is initiated by a customer, through any of these access channels. So that means there has to be a very clear definition of an API. And Manoj was also mentioning that this like very API centric and API heavy platforms, these omni-channel platforms would be, and we typically see that. So you can have like 20 different access channels, which means like there are 20 sets of APIs coming in. So we have an incoming side on our Elite platform. So we provide the flexibility here to define these APIs in a very dynamic manner. I should not go back to an R&D drawing board in order to add a new API, in order to facilitate a new customer access into the platform. So we provided a very dynamic way of configuring new APIs and publishing them out. That can be without taking the platform down, and by kind of configuring them and exposing them. All factors related to, say, authentication, security, etc. Everything is kind of like inbuilt into this part. So that means if the new access channel is coming in the future, we can enable those APIs without going back to our the engineering drawing board. Then once we get these APIs in, we have the ability to extract all the parameters, the API parameters in, and we convert them into a canonical form that we use internally, right? And this is where the true magic comes. Like, we have this whole microservice architecture, we have this transaction flows, we have the state machines, we have the execution flows, service building blocks, right? And then the unit credit policy blocks, which we call, it's a generic term we use for any commercials. This could be like any commissions that you need to pay, loyalty rewards that need to be provided. So any set of commercial parameters are included in this. So we can combine this and then create custom flows, and again without taking the platform down. So that means like one particular service, it could be like a merchant payment. So we can have like 10 or 15 or 20 or different types of execution flows for this merchant, depending upon maybe which or which channel they're coming in from, etc. And this actually enables, this transaction side part of it actually enables us to open up new execution flows without going back to the R&D drawing board. And then finally, any transaction that comes in needs to go out for vendor integrations, right? There could be for example, if it is AML checks, you need to go out to a different part. If it is a bill payment, you may have to go to a biller. So these are different, collectively we call them a vendor integration area. So we provided again a very a deep level of flexibility here, so that any of these canonical data elements can be taken and you can combine them into a vendor integration API. So we get the API requirements from the vendor side. So we look at the API, we match or map these canonical data forms into this vendor APIs, and we enable this, the APIs to go through. And again, like here, when a new vendor integration needs to be done, we don't have to go to the drawing board again, for R&D, which would mean like typically 3 to 4 months of turnaround time. So with this type of flexibility, we have enabled end-to-end, like from an incoming side to an outgoing side, and to provide a very custom execution flow model. We have enabled the platform, and so this has put us in good stead with a lot of our customers, be it banks or financial service providers or telecom operators, that we are able to open up new services. If they want to test certain new services, we are able to kind of provide them with this access of this new execution flows, new incoming APIs or new outgoing APIs, and let them do their tests and see if it works out for them, and they can roll this out on a production basis. So this kind of and for a pure omni-channel or a true omni-channel experience, a platform with a flexibility such as this is very important. And as you can see, the legacy architectures will not be able to provide that type of flexibility. And for banks or financial service providers, etc., this is a very important a message that I want to give, that you have to look at the requirements from your side, because adopting any legacy infrastructures would mean that in the future you will have to change your platforms in order to get better services, right? And with the MobiFin Elite architecture, we are saying we have covered you for that, right? We can take you for 10, 20 years down and help you evolve your businesses, and and for ourselves to grow with you. And this is the kind of a message that I have, because otherwise changing platforms every 3 to 4 years would mean it's like a lot of expense. It's not only the cost in terms of dollars, but could be like the time involved, retraining of your people, because you're used to a certain way of operations, and here is a new way of operations. So what we are suggesting is no, this is a platform, this is kind of to take you into the future, and we greatly look forward to kind of working with you and kind of explaining to you more on how this platform provides this omni-channel experience and the flexibility that you would need as a business to grow. So just to finalize, right, why MobiFin Elite? One is a unified customer experience across different access channels. This has been the core theme of this webinar. And we're also providing multifunctional dashboard for customer convenience. We have a very rich set of technology stacks that we use in order to provide what we call the MobiView, or and this is a monitoring platform for the customers, and you can look at this from various angles, be it operational use or for financial use, or for executive dashboard uses, etc. Unification of customer touch points, as we have said, like on the incoming side, we have multiple access channels. The adapter layer, binds all this together, and we are able to provide this unification of customer touch points. The improved user insight, there's a lot of insights that we are providing on this MobiView platform that will provide you, a rich insight of how the services are working, and the information related to that. And also from a rollout perspective, easier rollout of new products, as you've seen, from the adapter side to transaction to the vendor integration, there is a tremendous level of flexibility that we are providing. And so for you to try out new services and roll them out, we're trying to make it as seamless and as easy as possible for you. And several deployment options available. While we created this platform, and being a very next generation architecture, we are cloud native ready. And depending upon the readiness of the customers, you want to go cloud native today, you want to go Amazon, Azure, etc., we can do that. Or you want to do on-prem deployment, we can do that, or any combination thereof. So we have several, there are a lot of deployment options for you, right? And just I think from time point of view, I think we have a couple of minutes. So I think, Eric, I'll just kind of stop here. Let's try, open it up for some Q&A.
Great, Jay, thank you. We do have time for just a couple of questions, and any questions that are coming in that we don't have time to get to during the live event will all have been archived, and Jay and Minaj and their team will get back regarding those to you offline following today's event. Guys, what about IoT? What's the role of IoT going to be in banking, and are there lessons that banks can take from other industries when it comes to IoT?
Yeah. Manu, you want to take that? Okay, I can add later.
Yeah. So, Eric, banks, it's an industry needing high grade security to handle money handling aspects, right? This is probably the reason that why these banks are slow adapters. Now, while retail and manufacturing industries have led the way in IoT adoption, banks are still catching up. They have a lot to do. Banking processes like KYC, lending, collateral management, trade financing, payments, and of course insurance, it can be positively impacted with IoT adoption. Now, when used with other emerging technologies like digital identity, or smart contacts or this, IoT can actually create a profitable and a P2P good business model that have potential to disrupt the entire banking segment. Now, as the voice bots, or the self kind of answering machines, or the advices that depending on the consumer behavior, consumer past historical data, automatic robotic advisory will come. So all these segments actually become a part of IoT, where machines talk to each other, analyze the behavior, analyze the patterns, and then automatically recommends the customers. So gone are the days of prediction. Now it is prescriptive days. We are moving from predictive analytics to now prescriptive analytics, where customers will be able to see, okay, this is an ideal thing for them. So there I see a lot of role in IoT, where all these individual machine elements talk to each other and devise a profitable, strategy for an individual customer, personalized only to him. Yeah.
That sounds good. Yeah, actually, you pretty much covered that in a very comprehensive manner. Yeah.
Yeah.
Excellent, thank you. So Jay, you kind of started touching on a little bit about, the idea of banks being a little reluctant to adopt new platforms, new solutions because of the constant need to have to retrain and manage new platforms, and move from one to the next 4 years later and four more years later. Um,
Mhm.
what are what would you say are the biggest challenges with banks and other financial institutions as they look to establish an omni-channel presence, and how can they easily overcome them?
Yeah. So what the key factor here for the banks is like, obviously to take into account or take stock of what they have today, right? Because for the banks, they have to also kind of, they are in a very competitive space also, right? With the fintechs especially coming in a big way. And they need to kind of like understand that they need to upgrade their infrastructure, and in terms of offering this omni-channel facilities, right, they need to upgrade their infrastructures. And traditionally, because of the historical nature of the banks, the way of they've been operating, obviously they have certain set of infrastructures today. And moving into tomorrow, this is something that they have to keep in mind. At some point, I need to kind of take this plunge and then move to a new architecture. So I would say, like, the biggest challenge for them would be like, an investment that is absolutely needed. It will be a cost investment in order to get like, a very flexible platform that will serve them for decades to come, right? So that investment has to be done. And then the banks traditionally have, operated, and they have a pretty big size customers. So which means the data migration from the existing infrastructures to the new infrastructure is something like, is very important. Very carefully it should be done so that this migration process is very clean for them. So so this is like one other area. Then, like, even the core infrastructures that they have had, like, they may have had certain types of databases in the works that their backend team, their IT team, etc., is very comfortable with. But then with these new architectures, maybe new types of databases are coming. So this kind of brings in a little bit of cultural shift in the way the banks operate and think. And so these are some of the big hurdles that these banks need to kind of look at. And when they see that this magnitude of this is so big, they should then make a selection that, if I select this platform, then for the next like 2 or 3 decades, I shouldn't think about this problem, right? Like, it should not be that every 4 or 5 years I should come back and say, my God, this is not working out for me. I need to do something else, right? So this is kind of like a very, very careful choice, I think, that the banks need to make, and in order to stay relevant, in the times coming. And even within the banks, the new age and the neo banks, and the new paradigm of the banking is also coming. There's so many banks like Capital One, etc., in the US. They are kind of operating, and they are providing like a very big competition within the banking sector with the other banks.
Great, thank you, Jay. That takes us to the end of the time that we have for today's live session. I know there's still a few more questions rolling in. As I mentioned, those all will be archived, and the Panamax team will get back to you on each and every one of those offline following today's event. Again, if you are interested in a copy of today's presentation deck, the email address to reach out to Panamax is in front of you now. You'll also get a follow-up email with contact information as well as details on how to access the on-demand version of today's event if you want to go back and revisit some of it or want to share it with any of your colleagues who were not able to join us live today. So I do want to thank everybody in our audience for taking time out of your days. And of course, thank you to Manoj and Jay for sharing some of your experiences and expertise with our audience today. With that, we are out of time today. Hope to see you again real soon and have a fantastic afternoon, everybody.
Right. Thank you, Eric.
Thank you, Eric.